गुड इवनिंग एंड वेलकम बैक टू पैसा बोलता है में आपका फिर से स्वागत है. आई हैव बीन ऑलवेज टॉकिंग अबाउट वॉरेन बफेट एंड आई एम वन ऑफ वॉरेन बफेट्स ग्रेटेस्ट फैंस. I am also a great fan of Harvard Marks. Harvard Marks is one of the greatest distressed investors I have known, especially in the debt area. And he had a big saying once, which he said, "What the fools do last, the wise men do first." What does he mean by this? In any market where there's a big boom and bust sequence, the wise investors are the ones who get in first. They go it in first, they wait for the market to go up and sell it at the very top. And after that, they just sit back, relax, and watch the market collapse. The first man to do it was during the Mississippi bubble, was Richard Cantillon, who made £1 million way back in 1700s. It would be worth billions of pounds today. Richard Cantillon basically went long on the Mississippi stock. It went very high and then he shorted it and then financed other people who wanted to buy it, sold that stock for worthless and recovered their money. He basically rode the boom and the bust. But why did I talk about this today? It is because normally retail investors are the last people to get into this game and inevitably lose money. It is possible to see the portfolios of some retail investors, and I can tell you which bust sequence they have lost their money. If there is a stock of Kingfisher Airlines or Suzlon or Punj Lloyd, they are from 2008. Though some people have bought Suzlon in recent times. So, why are we discussing all this today? Because in two newspapers, especially Business Line and Mint, a story came and which I was very interested in. It shows that one particular stock in which bad news has come has been dumped by FIIs, institutional investors, and also mutual funds. Only one big institutional investor has increased his stake after the report, and that is LIC. This is why I am saying any middle class Indian who is investing in LIC should stop investing in life insurance company because it has become an handmaiden of some interested and vested parties. So I am talking about Adani. Adani's collapse started with the Hindenburg research report, which clearly outlaid that the entire ownership structure of the Adani group was opaque. There were a lot of shell companies in Mauritius, and how he initially got $3 billion, which was invested into Adani group. Where did that money come from? There is no proper report. And it is not only the fact that he has 75% stake in his own company, they are more than that 75%. Through two offshore entities, he is controlling more than 10% of it. This is in clear 10% of his own stock. This is in clear violation of all known SEBI norms. Of course, Adani is a very powerful man today, and therefore no action is being taken against him. When you have powerful friends, you need not worry. Once the Hindenburg report went out, the prices in Adani stock collapsed. And it is not the stock market that really should be bothered. Adani is drowning in debt. He has borrowed heavily from State Bank of India, other nationalized banks. The LIC has put money into its bonds, but most of his borrowing is abroad, and where credit default swap notes of Adani have gone up extremely high. Not only has that, according to that Hindenburg report, what he did is LIC invested a huge sum of money into Adani stocks, which pushed up the price of stocks, and that pumped up stocks was used as security to borrow more money. The news was that he had repaid some loans, but the Ken, a Southeast Asian newsletter, clearly exposed that in most cases there was only news reports, the pledge had not been released. This meant that they had not paid the loans as claimed fully. Also, to take over Gujarat Ambuja Cements, the group had taken a huge bridge loan. Now it is clear that they are unable to repay the bridge loan and therefore are looking for finances to clear that loan. Initially, it was said that Gautam Adani Group had bought this stock. Later, a news report emerged that clearly showed that the actual owner was Vinod Adani and not Gautam Adani. Then Gautam Adani, who till that point was maintaining that his brother had nothing to do with this company, with his company, decided to turn over and say Vinod Adani is part of my promoter group. There have been several somersaults and SEBI has not investigated the matter at all. And LIC issued a major clarification saying it has limited investments and it is very safe. When the entire world was selling, it was only retail investors and LIC who bought this stock. LIC is free money. There was no accountability, and no fund manager is going to get into trouble. All the meaningful fund managers have sold their positions and brought it less than 1%. In fact, Gujarat Ambuja Cements, which was a blue chip company, was acquired by Vinod Adani. All the mutual fund managers have started divesting their stock in Gujarat Ambuja Cements. Therefore, it is very clear that the wise money, the intelligent money, is no more touching the Adani stock. It is only LIC and the retail investor who is taken for a gullible ride who are investing in this. New retail investors, up to 1.1 million people, have invested $1.8 billion. That is nearly 14,000 crores in this stock. And this is why the stock has bounced back to some level. As long as interest rates keep rising in America and rest of the world, Adani is not going to get any relief. And it is very clear that inflation is not coming down in America anytime soon. So stocks like Adani will be under pressure because they cannot refinance their debt. Money can be called for at any time. The businesses in which Adani operates are not consumer facing business except Adani Wilmer. Even that is a low margin business. He does not own any major brands. Therefore, infrastructure business is not going to give high margins. Therefore, there is no possibility of him prepaying his debt. In such a circumstance, it is very tragic that retail investors are being carried away given by brokers and are buying this stock. I am reminded of what happened in 2008 with Suzlon, Punj Lloyd, Praj Industries, where a lot of investors have lost a lot of money. I am not saying Adani is going to go bankrupt. I am saying Adani's troubles are far from over. And so the retail investor who has invested in these stocks hoping to make a quick buck is not going to make any money in the short term. In fact, the chances of losses are far greater. Thank you for watching. Paisa Bolta hai. If you like this video, hit the like button of this video, press the subscribe button and turn on the bell notification. If you do not turn on the bell notification, you will not be notified every time we put out a video. Once again, I thank you for your support for Paisa Bolta hai.